Hello and welcome to this breakout session on market-based measures for decarbonising maritime transport. It's my honour to be the moderator for this session this afternoon. My name is Catherine Palmer. I am the Global Head of Sustainability at Lloyd's Register, and I'm also currently the shipping lead at the UN High-Level Climate Champions team. So as I said, it's my great pleasure to be able to moderate and guide us through this session this afternoon, which will have a keynote address and a really exciting panel discussion around the role of market-based measures. There's been recent submissions to the Marine Environment Protection Committee at the International Maritime Organization that propose a range of measures aiming to reduce greenhouse gas emissions from international shipping. The initial IMO greenhouse gas strategy has committed to at least halve greenhouse gas emissions from international shipping by 2050, with a view to full decarbonisation if shown to be possible. This initial strategy will be revised with the final strategy due next year. And for many maritime stakeholders, they are already calling for this level of ambition to be raised to full decarbonisation of the sector by the middle of this century. So in order to achieve these climate objectives in an economically efficient way, analysts agree that the upcoming regulatory framework will likely need to include a market-based measure. And among those market-based measures, putting a price on carbon from bunker fuels appears to be the most cost-effective way forward, in contrast to other potential measures that could be considered. Carbon pricing can also raise significant revenues, which potentially allow for the implementation of additional climate actions both within and beyond international shipping. So this session will explore what the role of carbon pricing could play in the policy mix that is needed to decarbonise shipping, and we'll discuss how the potential carbon revenues raised from international shipping can be used, managed and governed to address the key principles of the initial IMO greenhouse gas strategy. So it is my great pleasure to introduce Jan Hoffman, the Head of Trade Logistics Branch in the Division of Technology and Logistics at UNCTAD, who will deliver the keynote address. So Jan, please do take to the floor.
Thank you very much, Catherine. Very happy to join this session. I understand there's a wide range of people joining with different backgrounds. Some are very specialists, some very much into the topic, others maybe more generally interested. So I've prepared a few slides, which we will now practice, and it did work when we tested. So you should now all be seeing the market-based measures, and I will do the full screen. And if not, somebody would shout at me, it doesn't work. So this is an introduction to the theme of this very important session. Market-based measures, called MBMs, measures that place a price on greenhouse gas emissions. Emissions from shipping, the share of shipping emissions in global emissions from humans has increased. It's now slightly under 3%, so that's maybe a number to remember, 2.89% according to the fourth IMO greenhouse gas study. And yeah, the message here is it kept increasing. There was another 9.6% increase between 2012, 2018. Some newer data here from our UNCTAD review of maritime transport. Here you see it by vessel type, containers emitting more container ships than, for example, dry bulk carriers, although dry bulk carriers have more tonnage because container ships tend to go faster. So a lot of information in this chart. The very latest in the news, they kept going up even last year, in spite or partly because of the supply chain crisis. And interestingly and importantly, it is possible to assign the emissions to countries. This was not always the case. Shipping and air transport had been left out of some aspects of the Paris Agreement because it was considered too difficult. Well, here we have it, UNCTAD review of maritime transport with data from marine benchmark. You can assign it, for example, to the flag state. You could assign it to the trading, to the importer, to the exporter. It is possible with today's technologies, satellite, AIS data, and so on. So, 4 key messages I will sell to you in the 8 minutes that are left. The first one, a multilateral framework with a predictable price for carbon is necessary to avoid delays in the investments required for the decarbonization of shipping. Second, delaying decisions may lead to higher freight rates than a levy itself. I'll explain this. Because the resulting uncertainty in the ship owner, shipbuilding investors will delay investments, which in turn will lead to a shortage of shipping supply or a move of the supply curve to the left. I'll show you this. Third, a levy on greenhouse gas emissions has 2 key benefits. First, it will make alternative fuels more competitive. That's the overall point. But also it generates funds to support the energy transition, including in small island developing states and other vulnerable economies. And fourth, the last point I will make, optimistic, the maritime industry has the historical opportunity to be ahead of the curve, not like being behind and left out like in Paris. It can shape one global multilateral framework. Other industries need to implement many national frameworks where there's a risk of free riders and no global enforcement. So here's how I will try to convince you. Who is paying today, who should pay, some putting into perspective, a couple of demand supply curves, and opportunity. So who is paying today? Talking about the price, who is paying the price today? Now, it's not that all of a sudden we have new costs. No, somebody is already paying. Coastal populations in Bangladesh whose lands are flooded, investors in the Bahamas whose properties are devastated, farmers in Mali whose crops fail, families on Pacific Islands whose homes are disappearing, or here in Switzerland, ski resorts left without smoke. Who should pay? Well, who should pay the price? What is fair? The polluter should pay. The polluter should be given 3 options. This is really basic microeconomics 101. Anybody who studies economics, internalization of externalities has the beauty. You either, the private sector, the business, chooses, okay, do I not pollute? Yeah. Do I clean up if it's too late? Or do I compensate? And at the International Maritime Organization, already in 1995, this was mentioned, the internalization of externalities. It was highlighted that the beauty of this, again, the total costs will usually be minimized if each company can choose the cheapest mix of the mechanism. We have come a long way. We have just put latest proposals from shippers, from countries, from registries, from the shipping industry. A very important positive change of mindset towards this mechanism. And for us in UNCTAD, United Nations Conference on Trade and Development, it is particularly important that we see the vulnerable countries, like here in the Climate Vulnerable Forum, at the Dhaka Glasgow Declaration at the COP, also seeing the potential, the benefits. Nobody wants to pay taxes, but any alternative we have now realized would be worse. Let me put this into perspective. How much money are we talking about? It is really a lot. No? There are different estimates about how many million metric tons of fuel there are. Then you have to convert the fuel, like 1 ton of fuel is more than 3 tons of CO2. What levy do we take? I know that Ingrid will have some specific simulations. What should be the levy to achieve different objectives? But with these reasonable numbers, we are talking about $72 billion per year total carbon levy. And you can decide yourself, is this a lot or not, compared to the costs of climate change, compared to the profits certain industry sectors are making, compared to other costs, it's what it is. And if you compare it to the volatility of freight rates, like I feel the very latest spot charter rates, how they are going up, going down, for a recent assessment we did for IMO short-term measures, there we superposed the impact on these rates, and you hardly saw the difference. Now, of course, with market-based, you would see some difference. But again, just to highlight, here's the link, and is our study. We still think that we must work on this, but some countries, the most vulnerable countries, they will need support when it comes to paying those extra prices. So now here comes my attempt, markets, to explain this demand supply. I hope it works. At least the economists among you, I hope, will like this. There's a demand curve. The short term, it's very steep, longer term, not that steep. There's a supply curve, classical maritime economics. The supply curve gets very steep at the end because you have a capacity limit. This is what we see today. That's why freight rates are so high. So we introduce a carbon levy. Obviously, freight rates will go up, costs go up. The supply curve moves up. Isn't that a beautiful PowerPoint here? And now I claim, I believe, I'm afraid that without a global, predictable, transparent carbon levy, freight rates may go up even more. And this is because then supply curves moves to the left. To the left meaning investors are waiting. They are uncertain. They don't know. I'm not going to invest today in today's technology if I am afraid that it will be prohibited soon. But which technology should I invest? So, and this is similar to what we see today with the very high freight rates. In the end, there are opportunities. Let me highlight and conclude with 3 opportunities based on this message. Technological progress will never be as slow as today. No, it is not slow, it is fast, but it will be even faster. We have seen so much advances in the capacities of batteries, in digitalization, in data management. There's so many advances, and today's regulation has to be ready for tomorrow's technologies. Opportunity number 1, developing countries can also be providers of alternative fuels. This is here from a joint event we did with the World Bank and the IMO, where our Deputy Secretary General Isabelle Durin highlighted this opportunity. Zero carbon shipping represents a business and development opportunity for several developing countries. In the past, the bunker fuel market was a very non-inclusive market. Countries with large oil reserve would participate, others not. So that's opportunity number 1. Opportunity number 2, with the generated funding, we really can make a difference. We can invest in improved trade logistics. And this is again from our latest UNCTAD review of maritime transport, where we show how better port infrastructure, better trade facilitation, better shipping connectivity can all help to reduce maritime transport costs. So if we generate funding from a levy and help those vulnerable, small developing countries, small island states, who will have to pay more. They are affected by the climate change and by higher freight costs. But there are ways called compensate, called help, called internalize the externalities, or help them to reduce transport costs through other means. And last but not least, really, it's an opportunity for the whole maritime industries. It's an historical opportunity to be ahead of the curve, as the industry can shape one global multilateral framework. Other industries, national production, national systems where you have to convince many countries to agree on different carbon prices. No, here it's really very important opportunities. That's my brief introduction, and I thank you. Looking forward to the discussion, and I will stop share.
Thank you very much, Jan. I mean, that was really insightful and really sets the scene for what I hope will be an exciting discussion. So I'd like to ask you to stay on and join the panel discussion whilst I introduce fellow panelists. and allow them to make a 2-minute opening remarks on what they've just heard and presenting their perspective on the role of carbon pricing. So first of all, I would like to introduce Ingrid Siedenval-Jegu, who is a project director for the Global Maritime Forum. And our second panelist is Yap, who is a senior advisor at the Ministry of Transport in Singapore. So I will allow time for each of you to make your opening remarks. So I'll start first of all with yourself, Ingrid, please.
Thank you, Catherine. And good afternoon, everyone, or good morning. And first of all, thank you so much to the World Bank and the World Resources Institute for organizing this event and for inviting me and the Global Maritime Forum to join this panel. So the maritime industry has shown tremendous progress over the last years to decarbonize shipping. But the reality is that we're currently on an emissions trajectory that is not in line with the Paris Agreement goals. And this is why we founded the Getting to Zero Coalition, which is a partnership between ourselves at the Global Maritime Forum together with the World Economic Forum. It has more than 200 members from across the maritime value chain, working together towards having commercially viable zero-emission vessels operating on deep seas from 2030. We know that the technologies for having zero-emission fuels and vessels are actually within reach. And we also know, and Jan really highlighted that this shipping's energy transition could bring about a range of synergies and development opportunities. So ranging from improved air quality to the potential to develop new export and production of zero-emission marine fuels. But under the current policy and technology frameworks, fossil fuels remain readily available, reliable, fairly still cheap, and they're compatible with existing ships and engines. So this creates a competitiveness gap that the market really cannot solve alone, and this hinders the energy transition. So this is why government action is really called for. So with the Getting to Zero Coalition last year, we developed a call to action for shipping decarbonization, which brought together 240 signatories from across the maritime value chain in different geographies, calling on governments to deliver policies and drive investment needed to reach zero emissions by 2050, while enabling an equitable transition. And that last point is really important because if equity concerns aren't acknowledged and addressed, there simply won't be political support for such measures. So it's very much in the industry's interest, and of course, not to mention the moral imperative to really make sure that no one is left behind. So last month from the Getting to Zero Coalition, we published a report called Closing the Gap, which is written by UMass. And the report argues that policy action to close this gap should not revolve around one solution only, but it could be a combination of different measures. So this could include this global market-based measure that both you, Catherine, and Jan have referred to. But it could also be combined with other measures such as standards, for example. And the good thing about having market-based measures is that it would also generate funds, and those funds could be reinvested into the sector, but also it could be used to compensate those that stand to lose from the transition or that are at risk. So really looking into the equitable transition. So reaching a zero by 2050 pathway is still possible, but action really must be taken now. By the 2040s, zero emission fuels need to be the dominant fuel choice. So this really requires the development of international policy frameworks that accelerate and enable a just and equitable and effective transition. Thank you.
Thank you very much, Ingrid. I think you've raised lots of points there around timescale, equitable transition, and we will get into lots of these specifics when we open up for discussion. But I'd now like to move to our final panelist, Yap from the Ministry of Transport at Singapore, for your opening remarks. Thank you.
Well, thank you very much, Catherine. Climate change is a global threat that calls for concerted global action. And the maritime sector, of course, has an essential part to play. In this regard, the panel discussion on market-based measures in decarbonizing maritime transport is important and timely. Now, as a start, I would just like to make 3 points. First, there is certainly a role for market-based measures in decarbonizing shipping. Singapore is the first country in Southeast Asia to implement a national carbon tax as part of a suite of mitigation measures in our transition to a low carbon economy. The carbon tax provides a price signal to encourage companies to reduce their emissions, yet gives them the flexibility to take action where it makes the most economic sense. So the same would apply to a fuel or carbon levy on shipping. Second, key to the transition to green shipping is the research, development, demonstration, and deployment of maritime decarbonization technologies and low to zero carbon fuels. MBMs provide a clear price signal and reduce the price differential between traditional fuels and alternative low and zero carbon fuels to incentivize the adoption of green technologies and fuels. But more than that, MBMs, in particular, fuel or carbon levy, generate revenues that will be useful in not only supporting, but accelerating the development of the green technologies and fuels. And this is why Singapore supported the industry's proposal to establish an international maritime research board and international maritime research fund to support R&D efforts through a mandatory contribution based on fuel uptake. While it is not an MBM per se, the IMRB-IMRF proposal provides useful pointers for the development of an MBM, especially with regard to the use and management of revenues. As a non-discriminatory measure, an MBM grounded on a global carbon levy will support collective progress towards the IMO's levels of ambition for decarbonization of international shipping. Thirdly, given the global nature of international maritime transport, climate action must be advanced on a global basis under the leadership of the IMO for a level playing field. It must also be inclusive, with no country left behind, and the disproportionate impact on states, especially the vulnerable ones, addressed. These principles are important as discussions at the IMO on mid and long-term measures, including MBMs, continue. In fact, for the development of MBMs, we, as with some other IMO member states, see it useful to first capture the guiding principles. To conclude, let me reiterate that given the multifaceted nature of the sector, there must be collaboration among all stakeholders. As a major international maritime transport hub, Singapore is committed to working with all parties to advance strategies and actions to decarbonize international maritime transport. We are also committed to engaging constructively with fellow member states and partners at the IMO for collective progress on mid and long-term measures, including MBMs. Thank you.
Thank you very much for all the panelists for their opening remarks. We're getting lots of questions coming in from the floor as well, so I might do a mixture between some of the questions that I have as well as the questions from the floor. But I think I think there's one thing that you've all said is that carbon pricing will play a role in IMO's policy mix going forward. We've talked about some of the you've all mentioned some of the principles that need to be adhered to, and the opportunity that the international shipping sector has available to it. So I think my first question to the panel is, what do you see as the main challenges to adopting a global carbon price, and how do you think these challenges could be overcome? So that question is open to anyone who would like to answer it first. Yes, Mr. Yap.
As we all know, shipping is an essential industry supporting social economic development across the world through providing reliable and efficient services for the movement of goods and essential supplies. Hence, one key challenge is in fact ascertaining the appropriate carbon price that will incentivize the transition to low zero carbon emission solutions, but will also not have disproportionately negative impacts on trade, markets, and vulnerable states. Now, to address this challenge, there's no other way than for all involved in the IMO endeavor to come together with a shared outlook and a give and take spirit to work towards a good balance or compromise. And MBM, in particular a fuel or carbon levy, will generate revenues. Using them in a strategic way would be crucial in addressing this challenge too. One, to support the research, development, demonstration, and deployment of green fuels and decarbonization technologies, and this in an inclusive way. And two, to assist developing countries, particularly SIDS and LDCs, in addressing some of the disproportionately negative impacts that may arise. I'm also taken very much by Jens' presentation earlier that in fact there are opportunities even for developing countries, and I'm sure SIDS and LDCs as well. And I think that is something that we should also make people more aware of. Thank you very much.
Thank you. I think you sort of addressed one of the questions that we had from the floor about reinvesting, given the amount of money that will be generated from a carbon price. How can we reinvest efforts both inside and outside the sector? And I think you've highlighted some really valid points there of how we strategically can use the revenue. Is there anything, maybe Jan, you would like to add to what has been said already?
Thanks. Yeah. So you asked what if we are all preaching to the converted here and we all agree, like, why is it not happening?
Yeah.
So, of course, there are countries that depend quite a lot on foreign trade, on seaborne trade, long distance, large volumes, and who may themselves not be that negatively affected by climate change. So they have, how can I say, valid, or they're more reluctant to go in this direction in general. Now, if we want to decarbonize, and I see a majority. It's difficult in IMO, preferably we have consensus, but let's say we will have a majority, and I think we get a majority for a more ambitious goal to really get to zero by 2050, and even the current goal. So the next question then is, how do we get there? And there, I believe also the countries who may in principle be reluctant and who may benefit from current system, I hope they will then also see that among the different options we have, this market-based is a less costly option. What are the alternatives? Imposing a speed limit, having cut-off dates, prohibiting certain technologies. I mean, some of these may also come, but the beauty of the the market-based is it really gives a lot of the choices and the right investments and incentives to those who take the decisions. But the devil is in the detail. There will be fights over what to do with the money, and it is quite a lot. There will be fights about delegating authority, competence, decision, money to some still to be created international body, fund. So there are lots of very complicated details where I can only hope that the majority of the delegates, countries, members have the vision to see any alternative would be worse. You're muted.
Sorry, I was muted. No, thank you very much. I mean, like you said, there are some, there's a lot of alignment across the maritime sector, whether they be member states and industry, around the need for this. But there still are some significant challenges that we do need to overcome. But I think one of the things around alignment, and maybe I can bring in Ingrid here, is what we've seen in the last year is particularly that alignment from the industry actors, and of which you're representing. So I think my question to you is, why do you think even industry is supporting a carbon price today?
Yeah, thank you, Catherine. I think it's a combination of heart and mind, or as one of our members said, greed and fear. So I think that many industry representatives, they have children, they're concerned about the future of their children, they want to do the right thing. So that's the heart piece of the equation. And I think that's something which is interesting when it comes to the shipping space also, is that many of the companies are family owned, and I think that allows them to have a longer term perspective than only focusing on the very near term profits, which I think allows them to think about long-term sustainability. But then, of course, there is more immediate pressure from the outside. There are the Sustainable Development Goals that are setting a framework. Investors are asking questions to the shipping companies. Customers, they have their own Scope 3 targets, meaning that they need to reduce the emissions from their transport. So there is really a pressure from outside. Then there are obviously countries whose mere existence are threatened by climate change, and I think that that's something that our stakeholders are very concerned about. I also think that the industry has become increasingly convinced. I mean, we still need to see more ambitious commitments at the International Maritime Organization, but nevertheless, the initial strategy already sets a target, and that gives certainty to the industry. So I think that they know that decarbonization will happen. It's more a question about at what speed. Yes, I think maybe I'll leave it there.
Great, thank you. So I'd like to now turn to Jaap. I think we've heard a lot around strategic use of revenues. We've heard a lot around climate vulnerable countries. And so I'd like to ask, Singapore is known for being an effective bridge builder between Asia and the West, and between developed countries and developing countries. So do you see options to design a carbon pricing measure in such a way that no country will be left behind?
Well, thank you very much, Catherine, for the question. Now, as shipping is a global industry, a collective approach on the development of mid and long-term measures, including MBMs, will ensure that no one is left behind. So it is therefore critical that we have positive dialogues among all parties and for bridges to be built so that we can all move forward on a consensus-driven approach on these measures at the IMO. Singapore will certainly continue to play our part. Let me share some thoughts on how we could design an inclusive carbon pricing measure at the IMO. Firstly, deliberations on the various proposals should take into account the importance of maintaining a level playing field and of addressing the disproportionate impact on states, especially the vulnerable ones. We could take reference from the various ways that the IMO has addressed similar concerns on other issues in the past. So for example, an MBM could be applied in a phased approach, be it in terms of progressive pricing over time or to different routes and countries over time, taking into account their circumstances. Secondly, discussions on the measures and their impact assessments should be facilitated by good information, data, and analysis. And here I would like to thank UNTAC for coming forward in helping the IMO in providing such information, data, and analysis. And thirdly, mid and long-term measures at the IMO should be complemented by programs for technical cooperation and capacity building to ensure that developing countries, in particular SIDS and LDCs, are not left behind in the transition to low to zero carbon solutions. Now, let me just add one point in relation to these three earlier points. Together with the IMO Secretariat, Singapore initiated the Next Gen initiative. GEN stands for Green and Efficient Navigation, basically to bring all decarbonization initiatives onto a common platform to share, leverage synergies, and create opportunities for collaboration. We will be launching the next phase of Next Gen dedicated to catalyzing inclusive solutions for maritime decarbonization during the Singapore Maritime Week in April this year. Thank you very much.
Thank you, and that's really good to hear about the Next Gen, the next phase of that, and what to expect at being launched at Singapore Maritime Week. But I think your 3 points prior to that really set out a good strategic way forward of what needs to be the steps that can be taken at the IMO. Jan, I'd like to ask you, maybe you have anything you'd like to respond to what Jaap has the 3 points he raised, but do you expect there to be any impacts on global maritime trade from having a meaningful carbon price?
Yeah, thank you. And we saw also in the questions, there was something about if the polluter pays, who is it who pays? And this goes in the end in the same direction because the impact is on those who pay. Now, in the impact assessment we made, and I would say generally in long-term economics, the consumer pays. It's the final consumer who makes the choice. And in that sense, also the final consumer who may then see, okay, if my strawberries in winter are getting even more expensive, do I really need them? Yeah. And it's this mechanism that will finally lead to answering your question, what will be the impact on trade, geography of trade? There will be somewhat more nearshoring, near sourcing, regional networks. Also, if we go a bit broader, the whole need for more resilient supply chains and the current maritime logistics crisis, sometimes these are very, very deep. Now, we are in favor of efficient division of labor. We are in favor of trade. We are promoting participation of developing countries in global supply chains, value chains. But if that gets more expensive, so one point, lengthening a bit my answer to your very good question, apart from who will be impacted, countries nearshoring, there are two types of product that we have found are already today affected more than others by the very high freight rates at the moment for containerized trade. One are low value goods, because then all of a sudden the freight rate makes up a high share. So there are estimates for low value furniture. The freight rate can reach up to 2/3 of the value of the cost, the price of the furniture in the shop. That's too much. So that type of trade is first affected and goes down. The other type of trade that goes down is those with very, very deep supply chains, where you would say, well, if I buy a container full of smartphones that are very expensive, very valuable, from Shanghai to Los Angeles, you say, well, it's still not important how high the freight cost is. But the thing is, before this smartphone was loaded in Shanghai, the bits and pieces and components had been loaded first in Vietnam, and before that in Korea, and before that somewhere else. So all of a sudden this accumulates. So the products with very deep and long value chains, they will also be affected generally by anything that leads to higher freight costs. And this can be a levy, but as I said, and I keep insisting, alternative measures may have an even worse impact. Like if you impose certain technologies or impose certain speeds or prohibit certain solutions, all these will lead during the transition to somewhat higher freight costs.
Thank you. Thank you. I mean, I'm just going to ask a kind of random question. I know in your presentation, you put some potential numbers there, but maybe someone else or one of the other panelists, what actually is the carbon price that is going to be needed to enable shipping to achieve its 2050 climate targets? Does anyone have a...
Ingrid has the answer.
we look to Ingrid for the answer.
Well, I can thank the UMass team for the answer, because they gave us some numbers, and it's actually quite interesting, because what they have calculated both what would be the price necessary to reach zero by 2050 and 50% by 2050, and the difference really isn't very, very big. I mean, I don't want to marginalize it, because obviously it's a lot of money, but for the zero by 2050, the carbon price would be between $191 and $360. So there's like a high and a low. And for the lower target, so 50% by 2050, it would range between 173 and 264. So comparing the two lower rates, it would be 173 or 191. So by adding less than $20 per ton, we could reach full decarbonization as opposed to 50%.
Can I just come in, if Catherine allows me? If we come back to this mathematics that I put, that by these order of magnitude, yeah, talking about billions, it's a lot. But this is only as long as we are not decarbonizing. if we really then have 0 by 2050, you multiply 0 with anything, it remains 0. Yeah. So it's not that much really. It is just to get the ball rolling and to make the alternatives more competitive.
Yeah, thank you very much. So we've got 15 minutes left of our discussion, so I think we should start taking some questions from the floor. So thank you very much to everyone who is posting questions for the panelists. And I would like to start with this first question around the polluter pays. And I know we've touched on it a little bit already, but there's currently this debate in relation to the implementation of the EU emissions trading scheme as to exactly who is the polluter. So is it the ship owner as the asset owner, or is it the charterer as the party who pays for the fuel and decides where the ship shall trade? So I'd like to ask what your view is as to which party or parties should be deemed the polluter by any carbon tax policy in order to make these policies as effective as possible. Yeah, I will come to you first if you have any views on
that. Perhaps I'll pass it to Yen, because I think this is a technical issue, which I think he's probably the best place to respond to.
Okay, thank you.
I can give it a try, just because there's this reference to the EU system. I think I have sufficiently clearly highlighted the advantages of a multilateral solution. I really think it's important. Now, sometimes the perfect is the enemy of the good. And we have to be honest and realistic and say the fact that the European Union is advancing with a certain regional solution puts pressure on the rest of us to please move on. So I don't even want to criticize them. But the same discussion that is then taking place inside the European Union then helps us to answer this question. I still want to come back to my earlier point. In the end, the one who takes the final decision is the consumer. I gave the example of, do I need strawberries in winter? Yeah, but I don't want to prohibit and say, from now on, you don't eat strawberries in winter. I'm sorry, that's not my general attitude in free markets and consumer choices. And if somebody really has some health allergy or the opposite, must have strawberries, well, he just has to pay more. Same with speed. If we prohibit certain speed, there are certain goods that would no longer work with speed limits. So they can go faster, but they have to pay for the external costs. So in the end, yeah, who pays the second on this in shipping markets, just for those in the room who may not be that familiar with shipping. For bulk shipping, it is actually normally the charterer, the client, who pays for the fuel. While in container shipping, it is the shipping line that purchases the fuel and passes it on to the one who pays for the freight rate. But in both cases, now I repeat, it's the consumer who pays.
Ingrid, do you have anything to add to that? You know, given this relationship between the charterer and the ship owner, is there anything you want to add? Or
I mean, I think that Jan explained it perfectly, and I really learn a lot from listening to you, Jan. But I think that the only thing that I would like to add on to this is that this is why we need to have multi-stakeholder collaboration and across the whole value chain to avoid, you know, one trying to push the cost on to another, and to really try to take a more holistic view.
It's a very, very valid point. Thank you. So I'll move on to another question from our audience. What research, analytics, case studies, etc., may be needed to help move the international conversation along? You know, so are there any knowledge gaps that we need to address in order to get consensus and iron out some of the details? I think Ingrid, you might have some thoughts on that.
Yeah, I can come in on that. So what we heard in the beginning of the discussion was, you know, why are we not seeing progress at the IMO? And what we could hear is that many countries are concerned about how they would actually be impacted by moving to an MBM. So I think that having a better understanding of who would be impacted, but also looking at the potential benefits. So as I mentioned initially, some countries could actually develop a whole new export branch. They could create new jobs, generate new income. So I think that research that balances those two would give us a clearer understanding of, who are the ones that are really struggling and who are the ones that could perhaps, who fear the transition, but could perhaps actually end up being net beneficiaries. So I think that's something that could be interesting to look at.
Great, thank you. Are there any thoughts from the other panelists on any knowledge gaps that might be needed in order to move the debate along?
I think what we have seen at the IMO is a valid concern, and it's a good practice that the IMO actually and the member states requested and then undertook the impact assessment. It's good generally regulatory practice. Before, at the national, regional, wherever level, you introduce a new regulation, a new law. Well, what does it actually mean? And for the impact assessments that we did for the short-term measures, we were lucky that today much more data is available than, I would say, even 5 years ago. We could not have done the study 5 years ago. Today, thanks to AIS data and complete databases and fast computers and big simulations. I mean, Excel sheets no longer worked. We had to do but we really included every single ship in the world, every journey of every single ship in the world. We assigned trade, all the trade. We didn't do case studies. We assigned all the trade of the world to every journey of every ship. Of course, there are assumptions and estimates and so on, but this then allowed us to put it into a simulation model, a general equilibrium future model. So by 2030, what would be the change in trade? And there we did see some of what we said earlier, certain like more nearshoring, near sourcing, like those that are further away would trade a little less, and those that were closer to each other, maybe not that much less. But that type of, a lot of this is possible. It takes time. Please don't ask again to do this whole thing in 2 months. It was quite stressful. But this type of thing, it is possible. I mean, as the question is asked, I would try and avoid case studies, because then is this representative or not? And you do so many assumptions. I would try to do comprehensive models. Now, what we did for the short-term measures was only up to 2030, where you could somewhat still just extrapolate, like what trade, what oil price, a lot of assumptions you have to make. But to 2030, it's reasonable. But go to 2050, you have to go to scenarios. It's much more like hypothetical, but it's exponentially changing, different technology, prices of energy and so on.
Okay, thank you. So it seems that there's a lot of data, there's a lot of knowledge. We've got the process of the impact assessment. So hopefully that we should be able to using these that we have to our hands, be able to move the debate on. We have a specific question focused on Singapore. So Jaap, what are the incentives or technologies that Singapore are offering to green its port?
Well, the Singapore port, which is operated by PSA, has made quite bold ambitions with regards to greening of the port. And this includes the new mega port that we will be developing in Singapore. We are essentially going to consolidate all our terminals into one mega port, and that itself will already increase efficiency of operations, and that can have an impact on carbon emissions. But more than that, the the port will also utilize many digitalization tools. For example, to have just-in-time operations, where we will service container ships coming into berth just in time. And that can also extend to their voyages to make sure that, they are able to move in a way that they will reach the port just in time. But besides that, there are also many other green initiatives that the port will take, whether it's electrification of vehicles, electrification of the many equipment that the port has. So it will be very much really a move to decarbonize the port. And as I mentioned earlier, because Singapore is an international maritime transport hub, the port will also be very much involved in the Singapore government's effort to contribute to greening international shipping. And that includes, as I mentioned earlier, the deployment of low to zero carbon fuels for shipping. Thank you.
Thank you. Thank you. So very quickly, because I think we've got 3 minutes left, so I'm just going to ask one final question from the floor. And so I'd look to someone to give a very quick answer. Would greater clarity on how the funds would flow to SIDS and LDCs help acceptance going forward? Very quickly, who would like to answer that?
I can have a quick go at it. I think it would be really important to signal that a fair share of the revenue generated from MBMs would be directed to compensate those that are negatively affected. I do think that there are other countries than SIDS and LDCs that share these concerns. So I think that that's also something that needs to be taken into account.
For me, a quick answer is I support very much what Ingrid says. I think this is a journey that we want to bring everyone on board. And the interesting thing is that the vulnerable countries are the ones that are impacted in various ways when it comes to maritime decarbonization. So any help that we can give them, especially in terms of revenues that we collect from a market-based measure, I think will be very useful in bringing them on this journey. Thank you.
I can come in, and I really want to acknowledge and appreciate some initiatives, especially from some Pacific islands. They are aware that the process of the energy transition will make their own trade more expensive because they have smaller volumes, are further away, and depend more on maritime. But still, many of them have this vision and understand, because they are also more affected by climate change. So they're affected on both sides. Some of them are literally sinking, yeah, and have the weather impact, and it's really bad. It's existential. So in the end, they understand this shipping is an important part. We saw the numbers, but there's no way around that. We must help them. So help them to reduce climate change, but help them also to mitigate the negative impact of climate change mitigation. I hope this is not too confusing. We need to mitigate climate change, but we also need to mitigate, to reduce the impact of this mitigation on the most vulnerable. There's no way around it. And I really, you have to acknowledge the efforts many of them are making. Some of them have open registries. They are otherwise active with marine zones, with really, I feel very close and strong that they deserve this support. They need it.
And thank you very much, Jan. And I think you have really wrapped up the session for us in that last point. So we have run out of time, unfortunately. So thank you very much to everyone who posted questions for us. I'd like to say thank you very much to our panelists and your contribution. I think this was excellent, and it was really great to hear from you. And I think, like you said, in summary, we all agreed to a just and equitable transition. And so the strategic use of carbon revenues is going to be significant in moving forward this debate at the IMO. So again, thank you very much to everyone, and we've run out of time. So thank you, and I hope you enjoy the rest of your day.
Well, thank you very much for having me.
Thank you.
Thank you all.
Thank you, Catherine. Thank you all.